Hi, Scott. Thank you for that fine introduction. And hello, Jamie, my buddy. How are you?
Andy, hello. California greetings over there in Texas. How are you?
Uh, yeah, I'm sure it's much cooler there than where I'm at.
Well,
Although you guys were baking the other day, weren't you? Like up over 100 degrees, I think, right?
yeah, it did. It
Crazy.
popped up into that region, and then for people that don't have air conditioning, when you get up into the 80s, it's not so comfortable. But hopefully, it's cooling off here soon.
Yeah, I think so. All right, I see we have a really good crowd coming in today, and you guys are in for a treat. I'll just leave it at that. I will tease you with a new kind of feature we've been working on. And like I said, I'll tease it with you today. So anyway, let's get started. Let's go through the disclaimer first, like we always do. Guys, just remember this webinar is for educational purposes only. Okay, me and Jamie are going to be tossing around some ideas and looking at charts and setups and things like that, but nothing should be construed as advice as far as investments go. So if that is what you need or want or desire, you probably need to seek out a registered broker, a RIA, something like that. But let's dive in and take a look. Before we look at the agenda, I always want to let people know, well, this is a new slide. I definitely want you to know about our test drive that's coming up on July 23rd. And you do not want to miss it. If you're in here and you're kicking tires and you want to check out our product, this is the best way to start. For $8.88, you can come in and check out everything we have, and that does say for 5 days. Okay, that's trading days. You will actually get access to Friday before that Monday. So I guess that would be the 20th. You would after the close of the day. So you do have it for a weekend as well to play around with and get ready for the test drive. So for $8, we just ask for it. All you do is pay the exchange fees, and we take care of everything else. And so please check it out. There's been many people that come in and do that and end up being very long time subscribers. Now let's dive in to our, gosh, where is that slide? There it is. Our 5-star support education and training that we have here at Trade Ideas. Guys, we know it's a very powerful software, and we don't expect you to come in here and learn it on your own, although we provide lots of tools to do that, but we're also here for you. And talking about myself, Jamie, Steve, Michael, Sean, there's plenty of guys here, and not only that are experts with the software, we're all very long time traders. And let me not forget Barry. Let's start right there in the traders room. I know many of you guys are already in there. If you're not, what happens here is it's a free trading room for everybody, and you can come in and you can watch Barry basically navigate the market and trade using our software. A great place to get started if you're kicking the tires to get in there for a few days and check out probably over 500 traders, some very good ones. You want to get in there, and then we have webinars throughout the week, guys. We have 4 of them in this same time slot, 5 p.m. Eastern time. We got office hours on on Mondays with Jamie and Steve. Steve and I have one on Tuesday, and of course the trading studio here with myself and Jamie. And try to make it to that Wednesday session if you want to know anything about the product. It's a great place to get Q&A done and learn about new things coming down the pike. And then our Friday support session, guys. This is an incredible place. It's getting more and more people in there. It's 3 hours every Friday, starting at 11 Eastern time. You come in there and basically just an open Q&A. You can ask anything you want to, and we'll answer it for you. Not only answer it verbally, we'll be able to demonstrate it, using the desktop sharing software and our software. So get in there, guys, if you have any questions. If you do not get all your answers throughout the week, great place to finish up the week. And I'm going to backspace here because I want to talk about more training that we've added about 3 months ago. This is our TI University. Okay, it took place of our 101s. We were getting too big to accommodate the 101s anymore. But from what I'm learning and the response I'm getting from a lot of people, this may have actually outdone. I think it did outdo the 101s because you have 6 hours worth of education here. It's 3 hours, sorry, an hour and a half each day starting on Monday. It runs through Thursday. Jamie finished up 4:01 today. These are all in the 12 Eastern, 12 Eastern time slot. So if you are new to the software, this is what you want to do. You want to sign up for TI University. You do have to register for each class. To get that done, guys, and I guarantee you by the end of the week, taking these 4 classes, you are going to know a lot about the software. Not everything. It's tough to learn it all in 1 week, but you're going to have the gist of it for sure. All right, let's bounce through here, and let me just kind of remind you of what a beta that we have going on right now with Brokerage Plus, and it's our basically auto trading module that you hook up to Interactive Broker. It's only for intermediate to advanced, those who are really good at writing strategies, and what you can do is you can take those strategies and you can hook it up to Interactive Brokers and basically auto trade. If you want more information on that, go to trade-ideas.com/beta. All right, before I get into the agenda, I'm gonna have to get me a little swallow of water here. The old Texas allergy. They can wreak havoc on you, can't they, Jamie?
Oh, I know all about that. Unfortunately, I'll be going back there and
oh, that's right.
I'm just gonna load up Claritin before I ever get.
Yeah, that's the way to do it. All right, guys, the agenda for today. Market recap, okay, like we always do. Holly recap. Gonna have a lot to say about Holly. Another great day. I'm gonna show you an example of some beautiful directional bias we saw this morning from Holly. We're going to talk about the number of longs she had versus the number of shorts in an uptrending market today. That's the kind of stuff that you want to see from Holly. You kind of want Holly to show you the way, and you can see the directional bias long before the market moved higher this morning. I'm going to show you that, and then I'm going to spend some time on this new tool that's going to be coming soon. I've been working with Michael Noss and one of our developers, Dave, in creating this new tool called TI Composite Rating. I think you guys are going to like it, and I will show you a little bit of what we got started so far, and I'm really excited about it, and I think you will be too. So let me just back out of this right now, and let's dive into the market recap, guys. And we'll pull over. I know this may appear a little bit different. So I'm not in my normal. I'm not at home. Okay, I'm somewhere else right now. So I'm using a different computer, and I'm down to 1 monitor versus my normal 2. So let me pop open the spiders here, and let's take a look. Wow, things are getting really interesting, and the reason they are is we have a huge pivot line right here. I'll mark it up for you. Draw the horizontal line. You can see this was an area that was tough to get through at the first of the year. Finally got through it, but dropped down below it in early February and has yet to get back above that area now. And we tried once right here, didn't get that close and sold off quickly. We tried here, and one could even argue that we made an attempt right here, but this is really a kind of a tough area to get through. Made some headway today. We're right here at this this level, and I mentioned this a few weeks back. This is a case that I think if we can get through this level right here, we may see a real quick visit to this level. We will see. I mean, we're getting into that time of year where I don't predict too many huge moves. It's usually just kind of a either a melt up or a melt down. But in this case, yeah, with the Qs and what we're seeing late in the IWM and Qs, if we do get above that level, I wouldn't be surprised within 2 or 3 days we're not breaking out of this high. We'll see what happens, but we got to get there first, and it is a tough level. And so even though the Qs broke out another all-time highs today, let's just go ahead and pull those up and take a look. There you have it, just a beautiful move in the Qs. Now I'm not as excited about the Qs as I would have been 10 years ago because they had a more evenly distributed weighting than they have now. I mean, let's face it, the FANG stocks and Apple make up about 45% of the Qs. So anytime you see a move like this, you can usually bet Amazon is going to be pretty much the same thing. Yeah, Amazon looks like Facebook is going to be all-time highs. What else do we have? Google. There you go. Once again, all-time. I think it's all-time closing high there. And Apple's probably not too far, and it's not. It's got a little bit ways to go. Netflix, I looked earlier today, and it wasn't doing all that. It actually finished down on the day, but still poised for another move higher there in Netflix as well. So anyway, but I'm not going to argue with the fact that the Qs look strong. IWM seems to be taking a rest. They were leading the way for a long time right up here, kept charging, but lately, even yesterday, as the spiders and Dow finished up on the day, this one was kind of ugly day for there, and even today wasn't all that impressive in the IWM. So probably just resting, passing the baton. You know how it happens. You know how it works. But nonetheless, I think I think the key component here is the spiders. I still think to get these to go to all-time highs, you're going to have to get the XLF to participate a little bit. It's definitely off its lows that it hit about a week ago, where it tried to break down. It could not break down. It bounced off of it. But I think really to get the spiders breaking out to that all-time high, we're probably going to have to see this XLF, above 28 here. We'll see what happens, but it just needs some. There's 500 stocks that comprise. And this is a more evenly weighted index. You're going to have to, I think, have the financials to at least show a little bit of effort to get the spiders to go back to all-time highs. So we'll see what happens. But that's the key level, I think, to watching the spiders, and a break above that level, and yeah, we could see a new all-time high pretty quickly in the spiders as well. Mr. Jamie, you have anything that you would like to add to our market recap discussion here?
Well, Doctor, I concur.
Well, there you go. I'll take that as a compliment.
Everything that you've just stated there.
Yeah, I mean, even though this market's been moving higher, I've had been kind of wary of it, but mostly because of the spider. I mean, the financials, and I still see the Credit Suisse, looking ugly again, kind of. Deutsche Bank, I know these are European banks, but trust me, if they start to roll over and crash into lows, it's going to affect our financials, and it's probably going to affect the spiders as well. So keep an eye on those, and really just, if you want to make it easy, just keep an eye on the XLF. Maybe puts you some alerts if they do start breaking down. And you're holding longs in other sectors, maybe you might want to take some profits. But all right, that's enough of that. Let's dive into Holly. I'm gonna turn it over to Jamie as soon as I make just a quick few points on what I observed today in Holly. And the main thing I want to talk about is something. Let's put back up the spiders here, and I'm going to put it on a 15-minute chart. Let me just change this to a 15-minute. Make it easy. And we'll put it on the spiders, and I'll take off these properties here. All right, so here it's a 5-minute. I want a 15-minute. So here we have the spiders this morning, opening up. And I'll even zoom in a little bit. And we had a gap up, and these are 15-minute candles. So we had a move down, and then we had a back, first 30 minutes back up, but still nowhere near highs. And then we're kind of stuck here going into the next half-hour increment. But I noticed in Holly Grail, which would be Holly Classic, this was our first Holly before we added the other two. And I'm going to sort by time, entry time, and get it here somehow. There we go. All right, so 857 right here, when the market was basically in the middle of its range, doing nothing, nowhere near highs, you had a couple of longs fire off, and then another long fire off at 9, 901, 902, 902 again, 905 again. Finally got a short in at 905, followed by 3 more longs. So look at all these longs within a 10, basically let's call it 11-minute period. You had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, basically 10 longs. So we had 10 longs fire off, guys, in a 10-minute period, right in this mess right here when the market, I mean, you can't really include the gap up. I'm talking about the intraday. It was still, right pretty much in the middle of its high and low for the day, and then all these longs start coming out, telling you that, that's what we call directional bias, where Holly is equipped with longs and short strategies. Even Holly Grail had 3 shorts coming into the day, with it looks like about 7 or 8 longs. Neo, I believe, had more shorts in the hopper today. But the point I'm making is, with all the shorts that were out there, the strategies that made the cut, these longs are the ones that started firing off. Sunrise mover, sunrise mover. And it was late enough in the day where we should be able to get some other strategies if everything lined up and the filters were being met. We would get the other strategies to fire off some shorts. And what I'm saying is, what was firing off are the longs, which telling me that Holly was seeing long bias well before the market, went to highs today. And that's the kind of stuff that's very valuable as a trader, even if you're not trading the Holly trades, which hopefully you were trading some of the Holly Girl trades today, because look at this risk on profit today, 6.65. That's a very good day. And Jamie will definitely go over some of these trades, and there was some good ones. But I want you also to be able to garner from this, that it can let you know, where the setups are happening. If you're maybe you're thinking, okay, this is going to be a gap and crap. Okay, look at there, the first candle straight down. This is going to fill the gap for sure. And then all of a sudden you see, whoa, all these logs firing off. Maybe that can change your thinking, where you'll be saying, uh-oh, maybe we're not going to fill the gap. And sure enough, we didn't. We went back through highs, choppy, nonetheless, it up all day. And I thought that was a very good observation by from Holly there. So Jamie, if you would like to even take this and do what you do so well, is break it down even further for them, go ahead.
No problemo. I just grabbed the screen. Right. Stuck it to the market good today, and we will take a look at Holly number one's trades here in a moment. But what we're going to do first is we're going to kind of go in reverse order, right? We're going to take a look at Neo first, which I already have loaded up right here. Here's Neo. The complement strategy, as Andy was saying, showed up with more shorts than longs today, and then kicked out a total of 16 trades here. And out of those trades, we did have 4 that were on the short side. So, interestingly enough, first off, let's just take a look at the IWM, because Andy was pointing out earlier, opened up, took this little whoosh down to the moving average, and then making this little, almost a doji on the close, and then seeing the action here in the first 15 minutes right here, just whoosh, elevator down, right? Found its bottom here, and then all the way back up and to new highs before the day was out. So it's no big surprise to see a large portion of these trades today were Mighty Mouse, which are the smaller price stocks, as we can see here, anywhere from 260 today on the low side to 451 on the high side. And of course, it's no big surprise to see that Mighty Mouse only had a 16.7% hit rate today, and on risk off was actually down. Clearly, it was the bullish trend change where the alpha was captured best today from Holly Neo. So not a whole lot of trades to go over from Neo today, but I just happen to have it sorted by risk on, so it's kind of listing the ones that are interesting from number one. a risk-on standpoint. And let me just take a look at GLMD. Yeah, GLMD, you know, when we look at it right here, this is almost an official trade around, but there was no stop out. We can see that Holly took a reduced risk. So we'll talk about this one in just a second. But first, let's just look at who had the richest opportunity here, or the biggest spread between risk off of 32 cents and risk on of $1.06. Pretty big spread there. So let's talk about how we can try and attempt to capture some of this risk off and risk on spread from a trade by trade standpoint. And I do know we have a lot of newer people in the room today based on the polls and a big crowd. So for those of you who might be seeing this for the very first time, you know, what you're seeing here is a statistical system, right? And everything that is produced from these data sets here, these strategies, in other words, has a very obvious statistical advantage. As we can see here, these are the win percentages from any respective trades coming out of these strategies today. So we have statistical probability with these plays, but you might also notice we've got two different totals here for each version of Holly, risk on and risk off. So for the new folks out there, I want to make sure that you understand it's not like you have to pick one of these modes before you begin your day. It's best addressed from a trade by trade basis. So let's take a look. Since ZUO is showing risk off of 32 cents, risk on of $1.06, what exactly does that mean? We're also going to take a look at the exit reason. Why did Holly exit this trade? Because there's only 5 reasons why she can get out. Stop loss was hit, profit target was hit, timed hold came up, or her other 2 audibles, so to speak, that she can call. She can get out of a trade early, whether it's a winner or loser, and that's profit save and reduce risk functionality. Now when we look at ZUO on the chart, we can see all the Holly data automatically populates over here on the right column, and we have the entry signal represented by the blue box and the blue line, stop loss over here, the red box and the red line, and then profit targets up here at the top. The other green box is simply where the stock is at that moment in time. So we see this really clean entry signal right here that Holly generated right at 7:31 my time, so that's about 1 hour and 1 minute into the open. And boy, you know, what a beautiful entry, because never even threw a wiggle on the initial entry signal, just off to the races. Did take that little pullback and then marched on higher throughout the day. Really nice because it never acted like it was going to hit our stop. But the shaded area here, you will notice this corresponds with Holly being in the trade in risk off mode. Now, profit save. Holly was in the money, and then the stock stopped going up. So when you see Holly exiting on a reduced risk or profit save, it's basically a customized trailing stop type exit criteria. And the longer the trade is not moving in the direction intended, you know, up for long and down for short, then there's a time decay factor. So the longer it sits there without making any more progress, the more likely the more likely Holly is to pull the plug on it, right? So if we take a look at the hold time for bullish trend change, we can see it was designed around 1.5 hour hold time, 90 minutes. Now, she was in the ZUO trade a total of not even quite an hour, okay, about 55-ish or so minutes, and, you know, 90-minute hold time was in force. So she decides to pull the plug. Saves a little bit of money initially, right? It does take a pullback, but then again, stocks do that from time to time. So how can we simplify trying to capture some of this spread between 32 cents and $1.06? Well, it goes a little something like this. Let's say we're in 200 shares with Holly and we get that initial push. And of course, we're always paying attention, especially once we're in a position, as to how Holly is handling it. So we see her bailing out, and we can go with her 100%, say thank you very much, take our 32 cents, or even better, we can size it up according to our risk tolerance and according to what's transpiring on the chart, and go, based on my chart reading abilities, and of course some people are a lot better than others, but that's all a factor of time. The more chair time you have, the better you become at reading charts. But when we get this initial push and we're in the money nicely, we see Holly exiting prematurely, we can do a little bit of both, assuming we like what's happening on the chart. So we could peel out a half with Holly, keep the other half. If we're going to keep the other half and hope to get more, right, then we still have to adhere to our risk parameters. You can stick with your hard stop, or you can take the second lot and revert the hard stop to a break even. All right, and once again, this is all just dependent upon your risk tolerance. You've booked the first profit of 32 cents or somewhere right around there with slippage. So, you know, if we stick to the hard stop and it does go through, well, then there's a pretty good chance you might flat or lose a little bit on that trade. But if we lock it in and convert the second stop loss to a break even, well, then that's a little bit safer of a play. It's more of the risk off way to go risk on, so to speak, right? So by locking in the first lot, even if it rolls over and we flat or lose a couple of pennies with slippage, we've still guaranteed a profitable trade, right? So that's the simple way to do it, in my opinion. Do a little bit of both. Maybe later on, when you get more proficient at it, sure, you can start doing the whole lot, but it's all about risk tolerance. Okay, so that was the biggest spread on Holly Neo. We did have this guy, which is nothing to sneeze at, and of course, pets. I mean, this thing's this thing's been on a tear, and then of course, you know, it was like every day it was pets, 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 right? Of course, it took its beatings, just like all stocks do eventually, and now it's coming back on the scene. Obviously, there was a pretty decent volume in it today, but that's not really why it came across Holly. It came across Holly because the specific event that bullish trend change is looking at was triggered by pets today. So here we have the entry signal here. From a personal standpoint, I really like this signal because it's right before what could act as a break. So we have statistical probability behind it right off the bat, and then as an additional positive factor, hey, if it gets up here, which eventually it did, and the volume is still good, which it looks like it was all day because it finished trading about 20% more shares than it normally does. This presents an opportunity for a second entry, right? If you're like me and you like this pattern that you're seeing here, which is simply an intraday range break, right? Opening 15-minute candle here, puts in its high, puts in its low. It's already in the middle of the range, roughly speaking, by the time Holly brings it to our attention. And then we're like, okay, we've got statistical probability. Number one, bullish trend change. Anything coming out of there, 62.1% chance of success. Of course, hindsight's always 20/20. We didn't know that bullish trend change was going to finish batting 1,000 for the day, but it did, right? So it overperformed today. And let's see, I usually have my actual performance up here, but hey, good opportunity to show you that if the column that you're looking for is not here, right? We can always come into columns and add it. So, profit, what am I looking for, Andy? I'm looking for
max profit? Oh, wait, I'm sorry. No.
Let's see. Today's performance risk off. I believe that's it. Let's see. No, that's the wrong one. In any case, I'm not going to spend time digging for the column, but never mind. It's right here in front of me, okay?
It might be winning. Okay, there you go. Winning percentage a day. Yeah, there we go.
I even referenced it and then thought, that's just Jamie suffering through the heat over here after a long day, so forgive me. Okay.
Jamie, can I add something to pets? Because I brought this up in Steve's webinar on Tuesday because we had a trade very similar to this guy's, and you can see Holly exit reason was timed exit, and Jamie will point out where the timed exit happened on the 15-minute chart, right there where our shaded area. And remember how I told you on Tuesday? I said, listen, if Holly gets out for exit reason on a trade that's working beautifully and the market's going in your favor, all the stars are lining up, how you can use a bar reversal for your next exit. And you can see there on the 15-minute chart, there was never a bar reversal after Holly's exit. So that's a great little exit strategy that will help you keep in trades longer, guys. Maybe get out of a little bit and just say, okay, if I get a 15-minute bar reversal, I'm out. And guess what? You would still be in it.
Yeah. So, you know, a couple of good qualities about this. Before the range break, then a chance to add on, and then, as Andy said, never a bar reversal, right? Look how it's also surfing the green line here, which is the 10-period moving average, right? Yet another quality factor about this trade. Usually, you know, they'll come down here and flirt with it and touch it and touch it. Not this guy. It was like levitation pretty much all day, all right? So just additional little things that aren't necessarily listed here in these numerical values. You know, just about interacting and observing Holly, and the more time you spend with it, the more proficient you get with it. And of course, you know, we've all been keeping tabs on Holly since, well, January 1, 2016. So still relatively early in this whole AI game, right?
Absolutely.
Right. So here's an interesting one, GLMD. Of course, this was a short play, right? So here we see up here, just the opposite of the long play. Boom. Holly's like, you know what? I think this thing might be going down. And what did it do? As opposed to a stock that we just buy and it immediately acts like it's going to stop us out, what happens? Boom, boom, boom. For the next 30 minutes, 45 minutes, it's bucking us, right? However, the good news about it is that it came very close to that stop of 13.92, but at the high of this candle, it got up to 13.90. So it came within 2 pennies of a stop out. That's not uncommon. You know, sometimes they just barely get you and go back the other way. But in this case, if you were in the trade with Holly, sticking to your hard stop, well, then eventually you had a chance to peel out of this for a profit, okay? If you weren't in this, and you exercise the technique that I talk about all the time, which is, since there are so many trades coming through here, maybe there are a few people that are pretty quick on the keys trying to pile into all of them. Maybe not. Most people are not. But so you might look over and, okay, I'm in a couple of positions. I got my stop set. Now I have time to look at Holly's blotter. And you'll see, more times than not, at least a couple of positions that aren't working, right? So, you know, if you spot something like this, like GLMD, and you're like, ooh, it's about to get stopped out. Let's see what happens. And then this bar closes and it doesn't get stopped out. And then this bar closes and it doesn't get stopped out. You can think to yourself, okay, it came really close. Now, the thing about statistical probability for these plays is it's good all day. Every once in a while, the timing will be off, right? But that's the nature of the market. Timing is everything, right? Not just in the market, but pretty much all aspects of life. I mean, there's a timing element involved. So if you see here just barely avoiding a stop out, and then reasonable expectation, you know, lower high in this candle right here, and you're like, okay, well, it tried really hard this time. It didn't do it this time. Now we just open this candle, and you're like, I'm going to go ahead and short it because I can still use this stop loss. I can have lower risk and a better entry price, okay? Lower risk, because it's not all this that you got to risk. Now you only have to risk this, and you get a better price as well. So just keep that in mind, you know. Andy and Steve and I, you know, we laugh and talk about that all the time when we used to actually have to go to an office, and there's always a guy bitching and moaning about how he's just about to get stopped out. And we would do the same thing, but because that guy was telling us about it, right? Well, now we've got 3 people. Just look at Holly as 3 different traders now that you can watch and observe that trade with statistical perfection, right? And of course, it's no magic bullet, right? That's why we named Holly Holy Grail, because it's a play on the Holy Grail, right? But it's the closest thing you have to certainty in the markets, math and statistics, right? And so goes the universe. Okie dokie then. So that's Holly Neo. Let me check the time here, Andy, because I don't want to start, you know, getting too crazy here with all of the.
Oh, you got a few more minutes.
We have here.
Yeah.
So now let's take a look at the superstar today, because some days you're going to notice today Holy Grail had its day in the sun. But if you've been watching for a while, you know that sometimes it's Neo, sometimes it's 2.0, sometimes it's 2 or 3, sometimes all 3 of them, you know, have really good days. So Holly, original Holly, a little bit busier, 27 trades, had a little bit bigger stack of strategies, but not by much. But as Andy was pointing out earlier, you know, this long bias started off when the market wasn't really giving us a lot of signals. Even my compare count windows that I like to watch to try to give me a little heads up as to what direction the market will take, the numbers were skewed today because we had the 15-minute swoosh, right? And that's when I take my readings. So, of course, all my compare count windows were reflecting a selling bias because we had the whoosh down. So that kind of nullifies those guys. But if you know what to expect, then no harm, no foul there. So if we sort this guy by risk on, quarterback, one of the strategies Mr. Steve Gomez created quite a while back. It's been making the rounds because it's always good after Holly analyzes it and runs it through the mill. But even a more dramatic example of risk off, because she thought she was reducing the risk there. Because after we made the entry right here, look how it hugged that entry line. So she'd get up, then she'd get down a little bit. Up, then we're down a little bit, and then hugging the line. So the longer we get the flat spaces like this, the more apt she is to reduce the risk or save the profit, right? And this is just a classic example with a huge spread here. I mean, $2.29. So, you know, hey, get into the trade right here, and, you know, what are we going to do, right? It's working. It's hugging the line, not acting like it's towing that line so well, that entry line, not even flirting with the stop loss here. So when we see Holly peeling out for a flat, you know, not a big reach here to go, yeah, I'm going to stick to my original stop loss here because it's consolidating a little bit. It's not a big deal. Maybe we also, you know, take a look at the daily to try to give us a little idea of you know, is it, you know, butting up against the support here? Is it already up here? That we can see the majority of this move did not happen. You know, the whole time it's flatlining down here. Notice where my line is showing up over here on the daily. So we're just hugging this resist or this little support level right here. We do it for a little bit longer, and you know what I'm seeing right here, just like the other one, because I like the range breaks. I'm like, okay, it's already out of this first little range right here. Holly's giving me statistical probability. Then we get the sideways action right here. We see her peeling out. I'm thinking to myself, not only am I liking it because of this tight little range that's forming, but I know that later on, as time progresses, if this area right here is breached and the volume is good, oh, and how was the volume in RETA today? Well, it closed with a relative volume of 1.93. So really good. All right. This is always something that I look at, whether it's a Holly play. Of course, my high volume windows are only spitting out high volume. And, you know, that's a pretty crucial element a lot of the times. And this thing just worked like clockwork, right? Also, another opportunity, once you kind of train yourself to identify these things, first entry here with Holly, little sideways action. Second chance to bolster the position here as it breaks, and then just strong right into the close here. But definitely the most massive spread I've seen in a while here.
Oh yeah, that's a big one.
Versus 238. Once again, Holly's superpower, her strong suit, bringing us the statistical probabilities. We're a little bit better sometimes at managing the exits. So that's why it's a perfect combination, man and machine, right? It does all the hardcore number crunching, sets us up with statistical probability, and we just have to manage risk accordingly. Mm-hmm. Now, Roku, I mean, there were some fat.
There were some good ones. Yeah.
I mean, and once again, more of the same, you know.
No pain.
Roku, not exactly high volume, but, you know, maybe just a smidge below normal, but a stock that usually cranks out quite a bit of shares, right? So just more of the same right here. Why did she get out? Profit save, right? Why? Because we made the entry here. She's like, yes, 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 working. And then, you know, a little bit of, can't see it so much in the 15-minute candle here, but the upward move was diminished, and so she decided to pull the plug, take her 41 cents. Once again, all we have to do is more of the same. What I really like about these is even if we peeled out a half with her, kept the other half for a break even, not even close, not even close. So there was a lot of risk on opportunity today for us to participate. And just keep in mind, whether you get an extra dime, quarter, 50 cents, $1, that's huge over time, right? So, you know, lots of opportunity to participate in these spreads that you see here. All right, Andy, I think that
Good
sums
job.
it up.
Yeah, there's some good,
And
very good trades in there today, man.
I want to leave you with some time because I know you got something special prepped up.
All right.
But hey, Holly and her siblings doing exactly what we had hoped that they would do when we brought these things to life. So all good.
Yes, yes, very good, Jamie. Good job as always.
Maybe.
And yeah, the special treat that I was teasing with you guys with earlier. Let me kind of lay the groundwork. I know we always have new traders coming on board, and I think that's very wise. You know, if you're going to be starting out trading, to get you a software who can kind of show you what to trade. That's what's so great about trade ideas. I always tell people you not only need to know how to trade, you need to know what to trade, and that's what our software can definitely do for you. So I wanted to come up with, I was kicking around the idea because I used to belong years ago to IBD, and they have like a composite rating on there. Of course, that encapsulates some fundamental data and some technical data, if I remember correctly. And let's face it, most traders are technical traders. I don't trust fundamentals. I never have. I mean, there's some things I'll look at, and I actually have a fundamental data into it. But for the most part, I trust the technicals, and I think most of your. Let me tell you kind of what I was looking at. So I want to develop a trade ideas composite rating based upon technicals using all our huge number of filters, position in guys that can create some incredible custom formulas. And that's what we've done here with this composite rating. Now, we're just getting started. This is our starter composite rating. I'm going to kind of give you a glimpse of it. Now, you guys will not, obviously, this is going to be a proprietary formula that we are going to use. You're going to be able to have access to it, to our system. But I think it's going to really help, you know, not only traders who don't know how to trade and don't know how to read charts, to how they can kind of look at a number in our software and see that, hey, this is setting up pretty good technically. But also when you're using this as a column in your alerts, how you can easily, you see a symbol coming through, you'll be able to quickly look at the composite rating and get an idea of what that chart looks like, even without even clicking on it. So let me pull up a couple of above all moving averages. I'm going to pull up this because this is a very bullish alert window, and then I'm going to also pull up my Let's Go Fishing because this is one that is more adapted. It's looking for stocks that may be turning around on the 52. Let's call it the yearly trend. The yearly trend has been in a downtrend, but it's showing signs of maybe reversing that trend. So you're going to see some much more lower composite scores in there. So let's just take a look. I'm going to go into history on both of these trades. Let me drop it down so we can see the daily charts real good here. And let me run a history today on both of these, and you will see what I'm talking about. And once again, I'm just getting started. We are probably going to be adding 3 or 4 more different formulas in here, because we with all the stuff we have, with all the data that we're pulling, we can make it complicated so no one will be able to copy it, and it's going to be, I mean, we're going to be looking probably by the time this is all said and done, it'll probably 15 different market data points and charting points. So, but just to give you an idea, it's going to be a rating based upon, once again, technical rating. So in other words, here's stocks that are above all moving averages, simple moving averages. So this is going to be, obviously you're going to see some very high numbers in here. I can click on this chart. You can see this chart is very, put it on the daily, that would help. Okay, very bullish chart, okay? And like I said, you're seeing a reading here at 95. Well, right now, that's as high as you're going to see because, like I said, there's still extra things that have to go into this. But the beauty of this thing is now, and trust me, I have professionals that this is going to do a great, because I'm telling you, you'll be surprised the number of professionals out there. I'm talking big time RIAs that can't even read a chart. So just by looking at this composite rating, you're going to be able to tell. Let's take a look at this paychecks. Has one at 89. You can see they're about to break out, not quite through an all-time high, but very good score there of 89. Let's take a look. Of course, this Pfizer, you can see right there, this thing is probably on an all-time high. That's, you can't get it, better than any of that. I can pull up Amazon and you will see, I also have added it to my single stock window. You can see that has a rating of 95. When you get obviously charts like this, you just can't get any better than that as far as a composite rating goes. So obviously stocks like Amazon, Pfizer, they're going to be up there, with the highest rating by far. So, you might say, well, Andy, that's pretty easy to see. And you're right. I mean, anybody can look at an Amazon chart or this chart and say, wow, that's a good chart. No kidding. But, as these things are coming through, you can get an idea of what they're going to be looking like without even pulling up the chart. And I use my Let's Go Fishing as a good example here. You can see the composite ratings on these are nowhere near what you're seeing over here. So obviously, I can look over here and be able to tell these charts are not going to be as attractive as what we just looked at. That's fine. I can still get an idea of how good the rating is by looking at my column here. So I know if I see DXC coming through, without even clicking on it, I know this is going to be a pretty ugly daily chart, and it is. Okay, it's showing some rating. Now it's got a higher composite rating. That tells me it is technically setting up better on the chart. Maybe this is something I want to look at. And there you have it. See this? Look at this chart, okay, and then look at this chart. So you got this one right here, which is real close to, breaking out of a 3-month high, not far from, a 6-month high up here. So even though that it's still a bearish chart, it's showing signs, of much better signs of what we're seeing, in DCX, which is nowhere near a 3-month high. All right, let's take a look and see if we have anything else coming through here today. AAOI, this was one that was a trade of the week, Jamie, and I think I recommended this evening. I think we barely got stopped out of this, but look at it.
Yeah.
Now, yep. Now look at this rating, 78 compared to, 41 and 56. Well, you're saying, well, why would this be rated 78? Well, let's take a look. Even though if you go back, nowhere near its, 52-week high, but look here, it's real close to breaking out of a, that would be about a 8-9 month high there, and then you got a gap back over here. So constructionally, this is so much more attractive than what we saw over here in some of the other ones. So that is why, so if I'm watching this, Let's Go Fishing, and I see like a 78 coming through, I'm gonna pay special attention to that, because I know that technically it is setting up really sweet. And take a look at a few more here. old IBM's got a 56 rating. I can see there. Possibly about to hit a 3-month high here. But like I said, guys, okay, here's GGAL, only a 37 composite score. And look at that. That's a pretty darn ugly looking chart. The lowest score you can have is 20. I put a base score of 20 because it would be really depressing for me to watch zeros come through. So there's a base at 20 to start, and then we work up from there. So if you do see a 37, you're gonna know, if I see this coming through, I may even pass on it. So it's gonna be great for even the guys who know how to read charts when you're using this as a column, how you can just quickly glance over here and get a real good idea of what it's going to look like. And trust me, for people who don't understand charts, this is going to be incredibly valuable, because now while you're learning to trade charts, you can just basically look in here and look over Mike says Amgen. I'm not sure if you see it somewhere on my thing. But yeah, that has a score of 89. Not bad at all there, Mike. You can see it's still far from its 52-week high. I don't know where it is in its lifetime high, but probably that may be it. I don't know. Thank you, Waleed. Appreciate that. What is I'm not sure what you mean, but what is composite price? It's not a price, it's a rating, and the rating is from 20 to 100. Anything close to 100 is going to be very good. Anything down around 20 is going to be not a very attractive chart. It's just going to be an easy way for you to get a glimpse of the technical rating that we're giving it based upon certain parameters we're using, and we have so much to use with all our filters, so there's much more to go, guys. Like I said, we just kick-started it this week, and I'm not sure when it's going to be ready. I have to say probably we need to add some finishing touches to it, but it's real close. So hopefully it'll be in one of the upcoming versions, guys. You can find that it's on channel 4. Channel 4. There, Let's Go Fishing. So if you just go to your channel bar, go all the way down, you'll be able to Bill, I hope I didn't tease too early next week. I don't see any reason, why it can't be within, the next month. So I'll have, I think it's going to really help. And you're right, Neil, I think this could be a game changer for a lot of people.
Hey, Andy, since that's just a filter edition, then it will be available in both standard and premium, or will that be just premium only for the?
Well, I think yes. Very good question. And we need to work that out. I think we may have some sort of version for both. Where you get maybe some basic composite ratings with the standard, and then maybe some extra added filters, in the premium version, but that's yet to be determined.
Okay.
But yeah, good question. But yes, Friday would be nice. I'm not sure what he means by that. Did you, Bill? Oh, he's saying Friday would be nice for the composite index. Now, it's probably going to be a little bit later than that, but nonetheless, guys, it's going to be well worth the wait, and I can tell you it shouldn't be that long at all. I don't know, Jamie, if it's something, is this something that if we do complete, we don't really need to have to do a whole new version? It's just an addition, right? I mean,
yeah, we've got access to the composite rating as the filter/column.
Right.
We evaluate it over the next 2 to 3 trading days, and there are no issues with it. And if all the formulation is complete, you know more about that than I would, then it probably won't take that long. Once they get to this point right here, it's just about monitoring them and making sure nothing breaks. And if it doesn't, well, then it should be rolled out. Rolling it out is easy. Now, the timing of the rolling, I don't know, because ultimately that's up to the good old developers.
Okay, yeah. Well, yeah, maybe if we're lucky, we can squeeze it in before the test drive, but I can't make any promises there, guys, because we do have to wrap it up. But and add some more. See, so what we want to do too is, even though we're adding some really cool stuff in here as far as using our filters and doing custom formulas, we want to make sure we get it to where somebody can't come in and try to copy it, because it's going to be special just based on technicals, none of that fundamental crap. But all right, guys, that is going to wrap us up. We only have a couple of minutes left, and yes, once again, Stephen, we don't know if it's going to be part of the premium or the standard, or we're going to have an addition. It's probably going to be a version for both, but we'll have to wait and see on that. Thank you, Greg. I'm glad you got excited about that tease. All right, Scott, if you want to come in and walk us out, I'll pull back up the stack so we can get started.
Yeah, thanks. So a couple items on the way out. There's a test drive coming up. Anyone who's not yet a premium member should be considering enrolling in it. Trade-ideas.com/test drive. Good if you're a standard subscriber and you want to check out premium. Excellent if you're not a Trade Ideas subscriber at all and want to get the full flavor of what we offer. The test drive is 5 days. It starts on July 23rd. You can save your place now, and it's probably the best thing to do. So trade-ideas.com/test drive. Go to that landing page to learn some more about it and get your ticket. We also have an ebook that's out. Both Andy and Jamie contributed chapters to it. Just get it at trade-ideas.com/ebook. It's a great resource. It gives you 5 strategies to use in a market where you can no longer just buy the freaking dip and win like a bull market. It gets a little bit more complicated. You need to have some strategies when the bears come out, so get it. There's a discount code, and that's good this month. Save in July, all caps. We also have a podcast. Yeah, that's right. I was getting ahead of you there. The podcast, make sure you subscribe. Just search for Trade Ideas Podcast in your favorite podcast app and get the next episode, get the previous episodes. We have a discount code that's good this month. Save in July, all caps. And use that code to save 15% off your first month or year of Trade Ideas. You can also use that code to upgrade from standard to premium. Again, Andy, you could probably advance the slide so they could take a look. It's okay. In July is the code. Any questions, email us, info@trade-ideas.com. You can follow Steve Gomez at Today Trader. You can follow Jamie Hodge at QuantBot on Twitter. We also got at Trade Ideas. Facebook.com/Trade Ideas Pro is the location to find us on Facebook, to like the page so that you can share what we post with your friends. Thanks, Andy and Jamie. We'll have a recording of this up later on.
All right. Thanks, guys. See you tomorrow.
All right. See you guys tomorrow.